Good evening, warm evening to all of you present here. I would first, before starting my speech, I would like to thank the chairman sir for choosing me to be the last speaker of this SIRC regional council and his tenure, and the second speaker in the first physical meeting. So this is my second time I'm speaking in SIRC. First time I'm doing a physical speech in the Brahmaya Hall. Ironically, last time I did in Jan 16th, one day after tax audit date. This time also I got the opportunity of doing one day after the tax audit due date on 15th February. So without any further ado, we will just start with our topic, which is taxation of virtual digital asset. So before going to this topic, I just want to tell, with much fanfare, this finance bill has been passed. No amendment, nothing has been done. Only two major amendments are there. One is updated return, the other one is virtual digital asset. So a lot of people ask, what is virtual digital asset? What is to do with all these items? So my basic goal today is to define what is virtual digital asset as per section 247A, which is the new sections, what are the new sections in Income Tax Act, as well as to show examples of what are the various items which are there for virtual digital asset. So the first item, what I just want to show you is, you can see this picture here. So it's actually an Indonesian guy. It is an Indonesian boy who's having a selfie taken. So 2018 to 2022 period, he was attending college. So he took a selfie of him each day of his life. So every day in the same pose. Now if you see lockdown and all, he would be wearing clothes, all this he would be doing. Why am I showing this picture? This picture is now worth $1 million. This person is now worth around $1.2 million. He has sold this in the internet. So this is what is virtual digital asset. This is the modern era which we are going to go in. So you can see a young teenager, now he is 22 years old. He is worth around $1.2 million, which we can't even do in our practice itself. Lot of work we have to do. What he did is just take a selfie each day, sold it on the internet. So because of this, he put a tweet out. This is his first tax payment in life. The below tweet is by Indonesian tax department. So they have given how to identify. They have a tax identification number. They told please register for tax, pay tax. So now this is the latest trend in the entire world. So now what we have to do is, India has woken up. India has woken up now to know what is virtual digital asset, how to tax the same. How to tax the virtual digital asset, what thought process goes behind virtual digital asset, and what is crypto, what is non-fungible token, and they have kept a very open-ended definition. So let us, without any further ado, just go to the topics I will be covering. So first thing I will be covering is what is virtual digital asset, how it is defined. Then what is crypto, what is non-fungible token, and the various provisions in Income Tax Act. So you have a new section in the definition 247A, a new taxation section of 115 BBH, an amendment of gift. In section 56 they have amended gift for virtual digital asset, and a new TDS section. A new TDS section which is applicable from 1st July 2022. So now what are the various items that are going to be covered? First, we will just go to the definition of virtual digital asset. What is virtual digital asset? Pay very close attention on the top part. So we called it cryptocurrency and all that. But Income Tax Act very clearly defines, there is no currency word used. Any information or code or number or token. They have not used the word currency at all. They have not recognized all these cryptos as currency yet. I will tell you the reason why it has not been recognized. Now, they have excluded in the definition any Indian currency or foreign currency. So India is planning to give out any digital currency using cryptographic mode. So they have excluded any Indian currency or foreign currency. So what definition is given is, as per FEMA Act they have defined foreign currency. The same definition will hold good here. And Indian currency is obviously Indian rupee. There is no doubt about it. There is no interpretation issue there. Next, generated through cryptographic means. What is this crypto? Why are everyone using the word crypto, cryptographic? What does this mean? So that we will be covering in a greater detail by whatever name called. Later, what in the definition they have given is, this provides a digital representation of value. So it is giving some value. You have some value for that particular code or that number or that token. You have one particular value. Say it is worth 1 rupee or it is worth minus 1 rupee. Crypto also goes in the negative balances. So it is very possible that the seller should give money to the buyer to buy his crypto. So all this is there. It is basically moving on the demand and supply of the market. Then why does government want to tax it? They do not want to let go of this industry. I will tell you the reason how much revenue loss they would have. Suppose they do not tax these cryptocurrencies. Second one, so either they can do it for with or without consideration, they have a representation of an inherent value. So they have a promise or an inherent value with that currency. Whatever is that inherent value, that value you will be doing the purchase and sale. Next one, what is given is, it functions as a store of value or a unit of account, including in any financial transaction or investment. So what they can tell is, crypto, one is, we are doing trading means, it has some value. Second one is, I am storing it or I am keeping it as an investment. A lot of people tell, nowadays in the market, I am a crypto investor, I am a Bitcoin investor, I am an Ethereum investor. So all these virtual digital asset is a new age technology, a new age asset which has come. I'll tell you one very interesting fact about all this. Now olden days, real estate was a very valuable asset. Everyone used to buy real estate, physical property. I used to see a physical property and I used to buy all the property so that it appreciates in value. Now Facebook has come with a technology called metaverse. So in that metaverse, what they do is they sell virtual real estate. They'll be selling based on games. That virtual real estate today it is worth around $1 million, $2 million. There also they say prime locality. Like our boat club here, they have prime localities in those metaverse. So to see all these appreciations, any investment I am doing also it is covered. So it's a very extensive definition. It covers all the items. Any investment or any item which shows a value. Any item which shows a value will be considered as a cryptocurrency. Crypto asset. Next clause is non-fungible token. What is non-fungible token? We will see a great representation. It is purely based on artwork. Non-fungible token is purely based on artwork. We will see how they are categorized. Still it is not being defined by the central government. They are going to give a notification officially. So we will just see the general parlance. What is the common word used in the internet for the same non-fungible token? Because we are living in a digital era. Earlier days we couldn't even think about UPI being paid. Transactions going through UPI, all we thought about is cash. Bank transactions, now every person do not have a wallet. Today I came to this session, I didn't carry my wallet. All I used to carry is my mobile phone. Everything I can have in my mobile phone. From my Aadhaar to my driving license to payment, everything I can do through mobile phone. Technology has grown into a great detail. Now anybody can grow their assets based on this virtual digital asset. Government does not want to lose their right. Apart from that, if some other new digital asset comes, like this virtual real estate or some new item comes, government has told that they will notify the same. They will notify the same, and other than that, if they want to exclude something also, they will notify the same. So that is what is given in virtual digital asset definition. The next one, what is cryptocurrency? I have put a hyphen for cryptocurrency. What are they? They are currencies secured by cryptography. What is cryptography is? It is a protective measure, a preventive measure to protect the system from hacking. So to protect the system from hacking or it is a undecipherable text. So you cannot understand that text. So it will go from person to person. I will show you a diagrammatical representation of that cryptography, how it means. So it is nearly impossible to counterfeit or double spend. You cannot counterfeit crypto or you cannot do a double spend. It shows a clean transaction. This cryptocurrency goes as a clean transaction. It uses something called blockchain technology. So now what is this blockchain? What are they telling about this blockchain? Very simple. They are converting from one person. So it is going from my mobile to your mobile or some transaction. This crypto, how it will go is, it will go through the network server. It will answer certain questions on its own itself. Computer uses logic, transfer it, then it shows in a block format. From one block to another block to another block to another block. What does this do is, you can see the past, movement of the transaction. From one place to another place, you can see the movement of the transaction. So from A to B it has gone, then it has gone to C, then it has gone to D, then it has gone to E. That crypto will be showing the movement. Even with the rupee note with that serial number, we cannot track from where to where it has gone. Whereas this technology enables to move from one place to another. So there are various cryptos. What are the cryptos that are there? So why government wants to tax? So basically you can see the market cap of Bitcoin, Ethereum and others are very, very small assets. These two put together are worth around $1 trillion. They are worth around $1 trillion. Government does not want to miss out this particular asset. If you see the entire Bitcoin or crypto market, it is worth around $2 trillion. Imagine, and out of it, crypto, the major investors are in US, India, China, UK. So Indians, a lot of people are investing in crypto. It is a very, very major market. Now we have seen a lot of share investors coming up in the last 1 year. Same way, youngsters are going through this crypto. They have this craze. We do not know whether it will sustain or not, but this craze is there. Government does not want to miss a market of 2 trillion. 2 trillion is a very big market. They do not want to miss it out. So that is why they had gotten the section and brought in virtual digital asset. Because previously they cannot tell whether it is, there will be interpretation issues. In my previous interpretation, even without this section, it will come actually under capital asset. It should be taxed as long-term capital gain or short-term capital gain was my thought process in crypto when I'm doing the purchase and sale. Whereas when I do now, it is very, very clear what is the taxation rates. We will see the new section where they have implemented what head of income it will be coming. They have not specified the head of income. We have to assume what head of income is given in the section. So this is the Bitcoin movement, just a small movement. It started at $145 in 2014. Now it went around 65,000 and now it is around 44,000. It is actually as on today's date. So you can see the growth, exponential growth. Government does not want to miss. Any tax law, income tax law, it does not matter whether the income is legal or illegal. What they want to do is tax it. Government needs revenue. First I need to know the source. I need to know these are the transactions, these are the assets, these are the income. This is what is the purpose of Income Tax Act. Income tax does not matter whether it is legal, illegal, nothing. People are still asking whether crypto is legal or illegal. Still there is a doubt. But we want to tax it. Next one, Ethereum is the other big crypto. That also you can see it started at $0.75. Today it is around $3,500. So this movement, up movement, government had missed a bus in between. So if they were very active, in 2020 itself they would have touched the bus. But what happened? We were sleeping. Everyone was sleeping. And when you can see the spike is people got bored in lockdown. From that lockdown, at home sitting, they started investing in all this. So you can see the big growth here. You can see the big growth. Like you saw that selfie picture. He took selfie of 365 days. His worth went up. So now internet has gone into a craze of all these items. So you can see it has gone up. So the government does not want to miss it. So now I just want to show how is cryptography. So now you can just see the clear diagram. There are two keys. So only the person who it is reaching. I am transferring from Bob to Alice to Bob. Two people. So how cryptography works is, he puts a key and locks it. So we lock a house, same way he locks it. That time when you lock, it is called as encryption. The process is called as encryption. You encrypt the data. Suppose I want to go in between. I am a hacker. I want to go in between. Without any key, what I will be seeing is, if I want to see the data, what it will be written is PIQ6NZ. I will not understand what is read. I will not understand a single letter. So, can I do jigsaw puzzle also? I can't do any jigsaw puzzle, any work in this. It is purely encrypted. Computer changes the word entirely. This is what is cryptographic means. I am changing from a basic text to an unintelligible text or an undecipherable text or a cipher text. It's called as a cipher text in a technical term. So I transfer to that and then I decrypt. How I can escape is I will have another key. So I will open with that key. So Bob will open with that key. Stop trying to make fetch happen. So this is how the movement is there. In between we will not know what is happening. So this is the movement of cryptography. Now I am just telling the diagram is sufficient. Since for the lack of time I am not just showing this slide. It's just changing from ordinary plain text to unintelligible text, it is storing and transmitting the data with using cryptography. So it will always, why cryptocurrency is not a currency. So the next topic I just want to cover is why government does not want to call it currency. The definition is number, code, token or digit. So it does not call it as currency. Why it is not called as currency is, currency always has an issuer. So it has a sovereign authority. Reserve Bank of India is a sovereign authority. If commercial transactions are transferred through using only blockchain technology, cryptography and all this, if they say free market, everything can go from one place to another. I have transaction, sir, I have audit trail like no other thing in cryptocurrency. From one place to another I can see from A to B to C to D to E it is going. I have a pure movement. But what happens is there is no sovereign control. This can be used for any purpose. It can be used for legal, illegal. According to European Parliament, cryptocurrency is used for money laundering for 10 billion euros. So 10 billion euros is around 12 to 15 US dollars, 12 to 15 billion US dollars money laundering. Apart from that, Financial Action Task Force of the world, so they will prevent all terrorist action. They tell that this cryptocurrency is used for terrorist actions. ISIS is using all this. So because of this, these restrictions, government does not want to recognize it as an official currency. If they recognize it as an official currency, it will cause a major problem. It will cause a major problem for me to track everything. And I will tell it is legal means anybody can use it. But can government intervene in between? They cannot. They will say, sir, government big brother, they should not see my private data. But this is money flow. You definitely need to know as a government how much my citizen is earning and not. Then only we can get roads and everything in our big country as India. So this is a very, very interesting point. And historically currency, even gold, when they are issuing gold, they had a sovereign institution. When we issue gold in your earlier days, they had a sovereign institution, and if I am issuing gold or some value, I need to have a debt instrument. I need to have a debt instrument to cover my rupee, or I should tell some value. I have to have some comparison. US dollar is compared to gold, Indian rupees, now everything is compared to gold. Earlier days it used to be compared to US dollars. Now that is there. So this is the reason why crypto cannot be recognized as a currency. Government has not recognized as a currency. They have defined it as a virtual digital asset. Virtual digital asset because virtually there is a lot of growth. So with that we'll end with crypto. The next one is non-fungible tokens. What are these non-fungible tokens? So earlier days we used to see Ravi Verma paintings, we used to see Mona Lisa. All these are very, very worth paintings. And even in our Income Tax Act, capital asset had exclusion, which is personal effect. Personal effect had exclusion, which is archaeological collection, drawings, jewelleries, paintings, work of art, sculpture. So you have all these exceptions. That time itself artwork was considered as taxable item. Why it was considered as taxable item is there is a movement of demand and supply to art. I do not understand art. I do not understand why this is worth $70 million, why that is worth $91.8 million. But there is a movement. There is a movement. Government cannot miss this. So they will say each painting has a value. Same way, this is done digitally. All of this is done digitally. Very interesting thing is this everyday 5,000 inspired that Indonesian guy. So this is daily affairs. So how this token is very famous is there are 5,000 small pictures in it. In that 5,000 small pictures from 2017 to 2021, every day what are the events happening? When Jeff Bezos becomes the richest man, they show. Donald Trump becomes president, they show. Every movement is there in that picture and it is created. Brexit, Boris Johnson getting elected. So all these world events. I think one or two Indian events are also there. I am not remembering what are the events. So they covered all these events and this artist has done. The other one I seriously do not get why it is worth. It is one moon with a small moon, $91.8 million. So that is a crowd-funded investment. So crypto you need not own as a single person. I can own with multiple people. Should I know the other person? No. He has online one share, I have one share. Same way fractional shares we buy one share. Here fractional non-fungible token, I have one part, the other person will have another part, the other person will have another part. Will there, sir, I am just copy pasting it, what will be there? Sashank, I am copy pasting this, how this has any value? Very simple. the copyright is still with the painter. The painter has the copyright. He has the intellectual property. Whereas other persons just own the property. So this property will move on. Copyright person may get a small token. So this non-fungible token came out of the cryptography of Ethereum. So each coin or each crypto asset has its own coding. So for that coding, the coding used here is Ethereum. So Ethereum use coding, you transfer from, you make it as a non-fungible token. So they use that coding to develop it, put it online, and this has a particular value. So what is fungible, what is non-fungible? I am not understanding the meaning. All this I told, I am not understanding the meaning. Very simple. If I have a 100 rupee note, whether it is crushed, soiled, whether I stamped it, I will not stamp it, but whether I stamp it or it is there in the drainage, it is still worth 100 rupees. That is a fungible item. So fungible item is any item which has a value. It does not change depending on the shape, form or anything it has. So that is a fungible item. I can put a value. 100 rupees is 100 rupees. 100 rupees note of 2010 and 100 rupees note of 2022 is 100 rupees. It is not more than 100. It is not less than 100. It is 100. So the same way, fungible item is that. What is non-fungible item? Non-fungible item is, they are not fungible in nature. They cannot be interchanged directly. So if I have a painting, say I have a Ravi Verma painting, I soiled it in water. By mistake I put it in water. That painting value reduces. That painting value reduces, or something like that. Why the painting value reduces? Another new person will not want to buy a damaged product. It has a goods value. So it has a demand and a supply. So this demand value will reduce. So this is, the demand value will reduce. Why? Because it is unique verifiable identity, it has scarcity and it is indivisible. So this NFT is indivisible. Sir, Sashank, you told you'll give it in fractional shares. No, this fractional portion also has a value. It is crowd-funded, it is got through all these people, so it has a value. There is a buyer and seller. So these are the examples of non-fungible token. Now we'll go to the main crux point. So I am having a lack of time, so we'll just go to these points directly, how this is going to be taxed. So this was mentioned even in the finance minister's speech, what she is going to do. So for that, a new section of 115 BBH of Income Tax Act is implemented. So 115 BBH, what do they say? Amount of income tax calculated the income for transfer of such virtual digital asset is direct 30%. 30% plus surcharge plus health and education cess, everything put together, this section will be applicable. Next one, other than virtual digital asset, normal rate of tax. Same thing which we did in long-term capital gain and other than long-term capital gain. So that provisions are there same. The very crucial part is virtual digital asset is taxed at the rate of 30%. So 30%, what is this 30%, how it will be taxed is, there is no deduction in respect of any expenditure other than cost of acquisition. So they use the word cost of acquisition. So in my opinion, they have not told what head of income it comes. But cost of acquisition comes only in one head of income, which is capital gain. And they use the word cost of acquisition. They have not used the word cost of acquisition, bar index cost of acquisition. So they cannot give index cost. You cannot index your crypto value, so they are not giving any deduction. So deduction is only given for cost of acquisition. Apart from that, any other allowance, sir, I am not calling this as expenditure. I have some allowance, some discount given. Can I issue all that? No. No allowance can be provided. No allowance can be provided. Apart from this, I have one crypto, I am doing crypto planning. Share planning, a lot of people do. I book 1 year loss, next year profit, plan my taxes accordingly. Can I do here? No. One transaction I am getting profit, direct 30% tax. Any loss, sir, there I made a loss, Sashank, I made a loss there. In another crypto, it does not matter. Sir, same crypto I made a profit, same crypto I made a loss. Any transaction? No. There is no set off at all allowed on the same. Then, next one, can I set off in other heads? So I can't set off in this head. So Income Tax Act should be very safe. I will tell, okay, I can't set off in this head. You are not given provisions for setting off against other income. Very clearly said. You cannot set off against any other head of income. So not only this income, any other head of income you cannot set off. Apart from that, this loss, every year you are making a loss, this cannot be carried forward. You cannot allow it to be carried forward from this year to subsequent years. So crypto direct 30%, just reduce your cost of acquisition. So very simple computation. If I bought for 100 rupees, sold it for 200 rupees, I'm just telling a very small value, 100 rupees will be the profit, 30% tax, 30 rupees plus surcharge and cess. Very simple. So you have a lot of youngsters who are going to invest in this crypto. So now, how does government track this? All this is done online. How does government track this? What can the government do to track this? That is why they brought in another section. Where do government track any transactions? Either they bring 285BA specified transaction. There and all I cannot get any revenue. Why would I get revenue? Then these people will escape. Best way to do is bring a TDS section. Bring a very important TDS section. New section 194S. Started with 194, now we are till 194S. So this is applicable from 1st July 2022. Maybe the reasons are they have to get the return ready, software ready for the return, all that is there. So they may have a separate return for this. They have not given any rules or anything. But a lot of things are undefined yet. So they have told that it is applicable from 1st July 2022. So who should deduct TDS? Any person, resident or non-resident, because it is given as any person. They have not told any person being a resident. Second one is paying to a resident. You are paying to a resident, so it does not, TDS does not apply for paying to a resident. So Sashank, paying to a non-resident, 195 will still apply. 195 will still apply if you think of paying to a non-resident. Any sum. So I'll tell you the amount. How much amount you should deduct is any sum by way of consideration. You are giving any sum by way of consideration. It may be in kind, it may be in cash, it can be in virtual digital asset. I am giving one crypto for one non-fungible token. That is the major thing. Ethereum is used to pay non-fungible token, all these are. Because all of them are online crazy. We do not know. These are all on paper. But government do not want to miss a chance to earn money and do good job or something. Let us see. Then at the time of credit of such sum of the account of the resident or payment whichever is earlier. So like your normal sections, apart from salary, only salaries and payment. Other one is as credit or payment whichever is earlier. If I put in the name of suspense and all that, that also is covered. It is as good as credit to the party. And the sum equal to 1% of consideration. So it is 1% of consideration. It's same as 194IA. Immovable property 194IA and putting consideration of 1% of entire consideration for transfer. Same thing here. And one more thing why I am telling it's capital gain, consideration for transfer. Cost of acquisition, consideration for transfer. Both come only in the head capital gain. No other head it comes. So that is why this section is for the taxable value. So now, what if I am exchanging for another asset? What if I am exchanging for another asset? It's in kind. It is not in cash. There also they put a catch. Either if it is in kind or in exchange of another virtual digital asset, or partly in cash, partly in kind, where cash does not cover the TDS amount. What should I do is, the person responsible for paying before releasing the consideration. So before paying the consideration, he should pay the TDS. Or else he is in the violation of this particular section. They have not given the punishment for violation. The same violation of other TDS section is applicable here. So now, one more important thing. There is an exemption given. In like every section in TDS, here also there is an exemption. Interest 10,000, commission 5,000. Same way here, 10,000 specified percent income does not, the aggregate consideration does not exceed 50,000. Other than specified percent, it does not exceed 10,000. So this is your category for these two ratios. So who is a specified person? Specified person, always in our country, specified person will be small entities or individual HUF. So individual HUF are not doing any business. First B part we will cover. Individual HUF not having any PGBP. No heads in PGBP. Second one, individual or HUF whose total sales or gross profits does not exceed 1 crore, or if I am doing profession, 50 lakhs. Tax audit definition. Same thing they have brought here. We are not very creative people and all. Same definition, whatever we think, that definition only we will bring. So same logic here they have brought it. So 50 lakhs, 1 crore. So I will just show a basic representation of when TDS will apply, when not TDS will apply. Just 9 examples. Because this is the most important section which is there in crypto. Other thing is applicable after 2023, we will think then. Now this is the most important section. Turnover preceding year is 12 lakhs. He is a proprietor doing business. 2 lakhs is the transaction value. He is not specified, he is a specified person, but the transaction value exceeds 50,000. So TDS is applicable at 1%. 2,000 is the TDS value. Second one, 55 lakhs, he does 12,000. Business, turnover. So he is a proprietor, no TDS applicable, less than 50. Next one is a CA in practice. He is doing profession. Profession more than 50 lakhs. So same example, 55 lakhs, 12,000. He becomes other than specified person. 1% taxable. So that he has to pay TDS of 120. So this is the next example. The fourth example is there is a business. 1 crore 50 lakhs, 12,000 is other than specified. So 10,000 is the limit, 120. Salaried, we have to see the criteria. It should exceed 50. So that is why I gave an example of 50,000 no TDS applicable, 51,000 or 50,001 also TDS is applicable. Next one, what about firm? What about association of person? What about trust? What about ABC limited? They are all other than specified limited percent. So if that limit crosses 10,000, TDS is applicable. So who is the person is the deductee. So who is the person here is deductee. Deductor should deduct. If it crosses, he should check the other person whether he is specified or unspecified. Whether he is an individual or HUF or not an individual or HUF. How will I know the other person is crossing tax audit limit or not? We have to ask them only. There is no other source now. Maybe they will bring another source like your 206 AB where you can check whether PAN is there, all that. But if they bring that out, another major problem will come. You will know the other person's turnover. There will be Vaitharichal, jealousy, everything will be there. So all these problems will be there. So I don't know how they are going to get. So we have to ask the other person. Then the next one in TDS, this 203A, 206AB shall not apply to specified person. So 206AB, that special rates will not apply. But if it is not specified person, that 2%, 5% and all those rates in 206AB shall be applicable. So if they have not filed return for 3 years, the same category will be coming here. So 206AB was brought in last section to motivate people to file return of income. This is, they have considered here for not a specified person. Specified person, they have given relaxation. Not a specified person, it shall apply. So then apart from that, that suspense is there. And 194S shall not be liable to be deducted in any other thing. 194IA, 194A. Some people will be thinking, so e-commerce operator came last year. 194O new section. This is also E, that is also E. 2 TDS I have to deduct. This E is different from that E. So that categorization is very clear. Section is very, very clear. Then if any difficulty arises, half the people do not understand what is all these assets. Even presentation we make, you will be able to understand or not understand, I do not know. But government will tell, if there is any confusion, I will put the guideline. This guideline should go in the parliament of the country. So it should be passed in the parliament. The guideline should get a pass from each house of the parliament, both houses. So they have to discuss this, understand this, and they have to pass a law. So this is my last slide. Apart from this, there are other laws for crypto. It's still pending. Cryptocurrency and Regulation of the Official Digital Currency Bill 2021. So what this bill is proposing to do? What this bill is proposing to do is, I am going to create a new digital currency. This is what was there in our finance minister's speech. I am going to have all digital currency, and the objective is given to prohibit all other cryptocurrency, but with some exceptions. The objective itself is telling with some exception. Why those exceptions? If I ban that currency, I cannot use their technology. I need to use their technology to do some audit trail. So we should also be very, very, very careful. Our profession in this blockchain environment, because there is an audit trail, government may not require us in certain things. So we also need to update ourselves with this particular transactions. So what I would like to conclude here. So today, very short time I got to speak. So I am again sorry to sir to cut his speech short. So what I would like to tell here is, in virtual digital asset is going to stay now. It is very, very popular here. Even marriages are done in metaverse in Tamil Nadu, not entire world. First marriage in metaverse was done from a couple in Tamil Nadu. So all this digital currency, these youngsters, now you are going to see a lot of minor provisions. Minors are going to buy a lot of these digital assets, clubbing provision, all that we have to think. Still all that has not been thought by the government. What they are thinking is only the old school way, because now a lot of youngsters, they buy video games, they buy some patch, they buy some dress in the video game. I'll tell you how metaverse is gone. There is a Nike shop inside that metaverse. There is a Disney World inside that metaverse. So all these big corporations, they want to get in and earn money. So why they also did this? In US tax planning. US, all these virtual digital assets are still not taxed. I am doing business. I am not doing capital asset. All that planning they have. So in India, we are doing the first movers advantage. We do not want to lose this $2 trillion economy. $2 trillion economy of this crypto world. We will at least gain a tax at least of, government is sure of at least $2 billion also is possible. Very small amount, very conservatively, this is what will be their estimate. And with this, I would just like to end today's session. Thank you for all being patient listeners, and thank you. Sorry for extending till 7:20. Thank you. So if anybody is having any doubts.
How do you calculate the transaction value?
Which transaction value?
Because the transaction value 50,000, 10,000.
So it's there in the section. So I have to see the turnover of the preceding year. So specified person, you have to see turnover of the preceding year. Transaction value is the value of sale, consideration for transfer.
For example, if see one Ethereum or one Bitcoin you take, it's directly 44,000. So if you say 0.1 of Bitcoin is 0.1 into 44,000 transaction value.
So I'll be credited that much now in my account.
50,000 is nothing.
Yeah, 50,000 is nothing. That is what I'm telling you. It is nothing. Government is taxing. They can get, see, everything, amount is nothing. Service charge, 194J, 30,000. 30,000, I can't, if I bill some clients, some basic company accounts, I will bill 30,000. So all my transactions is booked there. Same way here only it is getting booked.
When you sell the Bitcoin, you will not for the other person. So how are you?
So that is why they have, what they have done. That is where there is a transaction loss to the government. They have to think about that, how to track this. There is no way to track. What they will do shortly is this Wazir X, Con DCX, Coin Switch, all these intermediaries, they will tell them to report the transaction in 288 SFT transactions, 285BA, AAS statement, TIS statement. You have all this disallowance. So somewhere they'll have a catch. Tomorrow they can hold all these intermediaries in hand.
This will be only from July 2022.
The entire provision is from April, TDS is from July.
No. For the past transaction also they will tax it.
No. The past transaction is not there. One more provision I forgot to tell. Gift. Gift is in gift section they have included virtual digital asset as a property. So if it crosses 50,000, you gift to someone. Planning. July only TDS is applicable. 1st April I go give you a gift. Don't do that. Suppose you are doing planning now itself, before 31st March, gift all your virtual digital asset to somebody else. Let them, but they will be gaining, we will not be gaining. Now anyway there is a fall in the market value. So with this I think I'll end today's session. Thank you. Any other doubts? Thank you.